Hey everyone, welcome back. So in this video we'll be solving another question related to errors, which is from June 2020 paper 22. The question says Nadia is a trader. Her financial year ends on 31st March. She extracted a trial balance at 31st March 2020 and the debit and credit totals did not agree. So this means that the trial balance did not balance. Why? Because there were some errors which did affect the balancing of trial balance, and therefore the difference was entered into a suspense account. So the suspense account has been opened, but we are not yet told the balance of the suspense account, whether it was debit balance or a credit balance. So we might be required to find that out. Then after Nadia prepared the draft financial statements, she discovered the following errors. So we have a long list of errors. There are 7 types of errors which we will be required to correct, right? Now let's move to the requirements first. Part A says to prepare the suspense account, include the original difference on the trial balance as a balancing figure, right? So this is what we were talking about in the beginning, that we have to find out the difference as per trial balance. Then in part B, we are required to identify some errors which are there in the list, and then in part C, we will be required to prepare a statement of corrected profit for the year ended 31st March 2020. And then there is a small part related to bad debts and provision for doubtful debts, right? So now what will be the steps? We cannot directly start with the preparing the suspense account. No, it is suggested that you first make the double entries, because by making double entries first, there are high chances that your suspense account will also be correct, and your double entries will also be used to calculate the corrected profit for part C as well, right? So we will be making the correcting entries first, and then we will be preparing the suspense account. Now let's begin with the errors. The first error says the purchases account was overcast by 110. What does this mean? This means that more has been written on the debit side of the suspense account, because purchases has a debit nature. So it has been overcast by 110, right? Now I have to decrease it so that it comes to its original value, and in order to decrease my purchases account, I will have to credit it, right? But since there is no problem in any other account or any other side of the double entry, so the suspense account will be used to complete the correcting entry, right? How? This is error number 1, and it will be corrected by crediting purchases by 110 and debiting suspense account by 110, right? In order to decrease my purchases, I am crediting it now, right? Now let's move to the second error. It says $13 for discount allowed in February 2020. We are right now standing in March, 31st March year end, and $13 for discount allowed in February 2020 had been credited to the discount allowed account as $15. Now what has happened over here is that the original value was $15. Instead of debiting it, we credited an amount in the correct account, that is discount allowed, but the amount is wrong. The side is wrong. See, the side is wrong. It has been credited, and the amount is also wrong, which is 13. The correct amount was $15. So what is the situation in the discount allowed the account right now? Let me show you that. Discount allowed, we were supposed to debit it. Instead, we credited it with $13, right, for any various debtor. However, discount allowed being an expense is always debited, and the correct value was $15, not $13. Now you have to make 2 entries in order to correct this error. First of all, we have to eliminate the effect of the wrong entry, right, from the wrong side, by now debiting discount allowed, right, so that this 13 will cancel this 13. And then in order to establish my correct entry on the correct side, I again have to debit it by $15, right, because discount allowed is always debited. Please make sure that you don't make this mistake that you directly debit discount allowed with the correct amount. No, this will not establish the right entry on the right side. Rather, this will do what? This will cancel the 13 from this 15, and then there will remain just $2 as discount allowed to the customer, right? So we don't have to do that. This error will be corrected in 2 steps. First one is to eliminate the effect of the wrong entry, and then to establish the right entry, right? So in total, discount allowed will be debited by $28. And again, since the problem was just in the discount allowed T account, so this error will also be corrected by crediting suspense account with $28, right? Now let's move to error number 3. It says a payment for insurance 220 was correctly recorded in the cash book, right? The correct entry is cash book credit and insurance debit 220, right? And cash book has been correctly credited, so no problem in that part on the credit side. However, what has happened is, but was recorded as 202 in the insurance account. So how much have we understated it right now? 220 less 202 is $18 are not recorded in the insurance account. We have understated the value by $18. So now in order to bring my $202 to $220, I have to increase the balance in my insurance account, right? And how can we do that in an expense account? By debiting an expense account. So in error number 3, insurance will be debited with the difference only, that is 18, because out of 220, 202 has been recorded. Out of 220, 202 has been recorded. And again, since the credit part of the double entry was correctly recorded, that was to credit cash book. So now again, suspense account will be used to complete the correcting entry, right? So far so good. Now error number 4. It says commission received 65 had been debited to the account for commission payable. Commission received, we know, is an income, right? Incomes are always credited. However, what has happened is we have debited the amount 65 in another account, that is commission payable, which is an expense account. And the entry to the cash book had been correctly made. Okay, so no problem in cash book. The problem is in 2 accounts. In an income account, we have not recorded the value, and instead we have recorded that in an expense account. Now we have debited an expense. However, expense should not have been involved at all. So now how will we correct this? By crediting commission payable. So let's first write this down, that commission payable will be credited by 65, because commission payable had nothing to do with this transaction. This was an income related transaction. We have accidentally recorded this as an expense account. Now the next step would be to establish the correct transaction in the correct account. Commission received is not at all recorded in this income account. So commission received will also be credited as 65 in its own account, just like how it should have been done. So commission receivable also credit. Now as the error says that the cash book entry has been correctly made, so there will be no correction required in that part of the double entry. Rather, again, suspense account will be used to complete the double entry. So suspense account will now be debited with the total, right? That is 130. Right, so it is very important that while you are making the correcting entries, you read the question very carefully first thing, then you analyze the effect, that where the error is, how the error should have been corrected. If the error is in one account, so is it affecting just that account or another account as well? For instance, in this error, take this as an example, that we included an expense account, however it had nothing to do with the transaction. So we first corrected the error in the expense account, and then we established the right entry in the income account as well. Okay, so now let's move to error number 5. Cash drawings 85. Cash drawings, how this should have been recorded? Drawings are always debited. This is a contra capital account, and cash credited. Were correctly entered in the cash book. So cash book has been correctly credited, but were credited to the drawings account. Drawings should also have been debited, but we have credited drawings, right? The amount is 85. So right now what is the situation in my drawings account? For instance, this is my drawings account. Instead of debiting drawings with 85, we did not do that. We accidentally credited drawings with 85. Now, in order to correct this error, I have to establish the entry on the debit side, right? So, I have to show some amount on the debit side because drawings are always debited. But if I write 85 over here, that was the value of the transaction, will this correct the error? No, it won't. It would rather cancel the entry at all and it will show nothing as cash drawings. So, now what we need to do is, rather making the correcting entry with the original amount, we have to make the correcting entry with the double amount, that is 85 plus 85, that would be 170. Why 170? Because this 170 will first cancel the 85 wrong entry which was made on the credit side, and the next 85 will establish the right entry just like how it should have been recorded. So, drawings will be debited with 170, and since again the problem is just in drawings account, not in the cash account, so suspense account will be used to complete the correcting entry. Right, last two errors. Error number 6 says the cost of a vehicle repair 190 had been debited to the motor vehicles account. So, motor vehicle repair is an expense. Instead of debiting repairs expense account, we have debited the motor vehicles account, which is a non-current asset account. So, this is very easy. This account should not have been involved, right? We have debited it. So, this means that we now have to credit it in order to reverse the effect of the wrong entry from the wrong account. So, motor vehicles account will be credited with 190, and we should have debited the repairs account, motor vehicle repair account, with 190. So, now we will be doing that. Now, see, in this error, suspense account is not involved. Why? Because we made the error in the non-current asset account, and that too on the correct side of the account, the side that should have been used for repairs. So, suspense account was not involved because we eliminated the effect by crediting it and establishing the right entry on the correct side and in the correct account. So, suspense account was not involved. So, not every time you will be required to make a correcting entry through the suspense account, right. Error number 7 says a payment of 100 to Robert. A payment of 100 to Robert means how this should have been recorded. We are making a payment to Robert. So, Robert's account should have been debited with 100 and cash or bank should have been credited with 100. But what has happened? Had been posted to the account of Roberta. Okay. See, due to the confusion in the names, instead of debiting Robert, we have debited Roberta, right. However, since the error is silent about the credit part of the double entry, so cash has been correctly credited. The problem is just on the debit part. Now, again, do you think suspense account will be involved or not to correct the entry? No, it won't be involved. Why? Because now it has been posted to the account of Roberta, means it has been debited. So, now Roberta will be credited to eliminate the effect of the wrong entry, and Robert will be debited just like how his account should have been debited. So, Robert debit with 100 and Roberta credit with 100 as well, right. So, now we are done with the double entries. Of course, you won't be spending so much time on the double entries in the exam, just how we have spent it before preparing the suspense account if the double entries are not required as a particular part. But of course, double entries do help you in preparing the suspense account and in, of course, calculating the corrected profit. So, now we are ready to prepare our suspense account. What are the steps? First, we have to go to our correcting entries and identify those errors which are corrected through the suspense account, right. So, in these correcting entries, in error number 1, we corrected it through suspense account. Error number 2 also involved suspense account, 3 as well, 4 as well, 5, and yeah, that's it. 6 and 7 did not involve suspense account. So, we will be using these errors, these correcting entries to prepare our suspense account, but keep this in mind that we don't have the original difference as per the trial balance, right? So you have to leave some space on the debit and on the credit side so that you insert a balance as original difference as per the trial balance in the end as a balancing figure, right? So the year end is 2020 and the month is March 31st, right? So the first error is being corrected through debiting suspense account and crediting purchases. So suspense will be debited with the name of purchases 110, right? So purchases suspense debit 110. Then in the next correcting entry we are crediting suspense account because of discount allowed. So suspense account will now be credited with 28, right? Done with the second one as well. In error number 3, suspense account is being credited because of insurance 18. So again it will be credited because of insurance, same date March 31. Then error number 4, suspense account is being debited with because of two accounts, right? So we have to write them separately, commission payable and commission receivable 65. Write that down separately. And the last error which is being corrected through suspense account is drawings debit, suspense account credit 170. So suspense will again be credited with 170 because of drawings, right? Now as you can see that which is the heavier side, this side or this side? 110 plus 65 would be 240. However, just 170, 18 and 28 would be 216. So this is the heavier side. This means that our totals would be the heavier ones, of course. 240 would be the total, and our balance, original balance as per the trial balance, will fall on the credit side, right? And that would be 216, or 240 less 216 would be 24, right? So this was the balance which was originally inserted in the trial balance as suspense account on the credit side, right? You can write that down as difference as per trial balance. So this was the amount which we were required to find out by the question that include the original difference on the trial balance as a balancing figure, and we have done that. Now let's move to part B. Part B says identify the type of error made in error 6 and error 7. Okay, so type of error means you have to name the error which is being made in error 6 and error 7. Now let's read the errors again. In error number 6, it said the cost of a vehicle repair expense, which was an expense account, had been debited to the motor vehicles account, which was a non-current asset account, right? So instead of recording this transaction as an expense, we recorded this in another class of account which was a non-current asset. So you remember which type of error this was? This was an error of principle, right? That error which does not affect the balancing of trial balance. That is why its correcting entry as well did not pass through the suspense account, right? So instead of recording this transaction as an expense, we recorded that as in a non-current asset account. So that is called error of principle when the class of account is wrong. Now error number 7. What was happening in error number 7? A payment of 100 to Robert had been posted to the account of Roberta. So assuming that Robert and Roberta both are accounts payable for the business for Nadia, and instead of recording this transaction in one payable account, she recorded that in another payables account. So since they both belong to the same class of account, this type of error would be called error of commission, right? If the class of account is same, that is called error of commission. If they are different, that is called error of principle, right? So we are done with part B as well. Now part C. Part C says complete the following statement to show the effect on the profit, right? Effect on the profit for the year for correcting errors 2 to 7. Why 2 to 7? Because 1 has already been done for you. If there is no effect on profit, write nil in the no effect column and calculate the corrected profit for the year. Ignore depreciation. The first one has been completed as an example, right? So now what are the steps when we want to calculate the corrected profit after correcting all the errors, right? So there are certain things which you should keep in mind. First of all, your double entries, your correcting entries will help you a lot while calculating corrected profit. So just go to your correcting entries, then mark all the entries that will affect the profit, or in other words all those accounts that goes in your income statement, right? You remember when we were preparing the suspense account, we used to mark all those entries which pass through the suspense account. Now for calculating corrected profit, mark all those entries which will affect the profit, or in other words any correcting entry that will pass through your expenses accounts, your incomes account, your purchases, sales returns, purchases returns, etc. Only those items will be affecting or will be used to calculate the corrected profit. And if you find some entries which do not become part of income statement, for instance all the assets, non-current assets, current assets, your liabilities, capital account, this does not affect the income statement because they become part of your SOFP. So we will be completely ignoring their effect on the corrected profit. Then after marking those, you now have to analyze that whether by debiting or crediting that account, that particular account will increase your profit or will it decrease your profit. For instance, a very common example would be sales has a credit nature, right? So if I am crediting sales in my correcting entry, that will increase my profit, so that amount will be added to the profit, or in the increase column we will be writing that, right? However, if I am debiting sales, or in other words if I am debiting purchases, so purchases being a revenue expenditure, this will increase my purchases, and the another effect would be on the profit would be it will decrease my profit. If sales are being debited, so sales are decreasing. If I am crediting purchases, so this means that I am decreasing purchases, decreasing my revenue expenditure, so my profit will increase. So this is how you have to analyze the effect, that what is the nature of the account and how it is being corrected, whether debiting or you are crediting it, and then how will this affect the profit, right? Same goes for sales returns as well. Sales returns has a debit nature, that is if you debit sales returns, this will decrease the profit, right? What are sales returns? You sold some goods but now they are being returned to you, so the inventory in your business increases, that is why profit decreases. However, sales returns, if they are being credited, this will increase the profit, right? Same goes for purchases returns. If I am crediting purchases returns, so purchases returns, this means that my revenue expenditure is decreasing, so my profit will increase, and vice versa, if they are being debited, my profit will decrease, right? Incomes have a credit nature. So if I am crediting incomes, for instance if I am crediting commission receivable in my correcting entry, that will increase the profit, right? However, if I am debiting them, this will decrease the profit. Same goes for expenses. If expenses are being debited, profit will decrease. If expenses are being credited, profit will increase, right? So just take a moment, look at this table, and then we will be moving towards our correcting entries, so that we find out whether which accounts will be used to calculate the corrected profit, right? Now my correcting entries are over here, right? Now in the first one we can see that purchases account is being involved. Let's mark this with purple. Purchases are being credited, right? I am crediting purchases. Now purchases, we know that purchases has a debit nature, right? But if I am crediting my purchases, this means that I am decreasing purchases. So purchases decrease will not also decrease the profit, no, but this will increase the profit. An expense, revenue expenditure is being decreased, so this will increase the profit by 110, right? And you can also verify this from the space given to you, that error number 1, which was given as an example, increase in profit, right? So by correcting my purchases. You remember what was the error? Purchases were being overstated, right? Purchases account was overcast by 110. So, in order to decrease purchases, I credited them, which increased my profit. Then, in error number 2, discount allowed is an expense, right? This will go in my income statement, of course. So, discount allowed. Now, discount allowed, you can see that in this correcting entry, this is being debited, right? And being an expense, if an expense is being debited, so this means that I am increasing my discount allowed expense, which will decrease my profit. So, my profit will decrease by 28, right? You remember what was the error? Even if you just see the error, you can also analyze that of course it will be decreasing the profit, because previously we recorded this on the credit side, which means that we decreased an expense and that too with the wrong amount. So, now I am increasing it to show an expense being incurred. So, 28 will decrease my profit, and I will be writing this in the third column, 28, right? We are done with error 1, error 2. Now, error number 3. In error number 3, what is happening? Remember, insurance, the correct value was 220, but however we just recorded 202, we forgot to record the 18. So, again in this example, an expense is being recognized, right? This will increase my expense, and in turn this will decrease my profit. An increase in expense will not increase profit. No, please don't think like this. An increase in expense will decrease the profit. So, again 18 will be written in the third column. This will decrease the profit. Increase expense, decrease profit. Then what is happening in the fourth example? In the fourth example, you can see that commission receivable and commission payable, both of these accounts, they become part of my income statement. One is an expense account, another is an income account, right? So, in commission payable, commission payable, in this example, what was happening, instead of recognizing this as an income, we accidentally recorded this as an expense, right? So, now as you can see that I am now crediting an expense. Expense has a debit nature, but if I am crediting an expense, am I increasing it or am I decreasing it? I am decreasing it, right? You can see this from the table as well, that if you are crediting an expense, this will decrease the expense and it will increase the profit then, right? So, commission payable was incorrectly recognized before. Now, I am reversing the error. So, this will decrease the expense and increase my profit. First effect. Second effect, commission receivable is also being recognized. So, this is an income. Incomes, they have a credit nature, and if I am crediting an income, am I increasing it or decreasing it? I am increasing an income. So, direct relationship with the profit, profit will also increase. By crediting an expense and by crediting an income, both of these will increase my profit by 65 plus 65. So, in total 130. I will be recording that in my second column, 130 increase in profit, right? Now, error number 4. Error number 4 involves drawings account. Okay, drawings. So, drawings are not recorded in the income statement. We know that they become part of SOFP. So, their effect will not be reflected or will not be used to calculate the corrected profit. So, by correcting error number 5, my corrected profit will remain unaffected, and that is why I will write in this column, in the first column, in the no effect column, nil, just as I was instructed to do in the beginning of this part. Then error number 6, it says now in this example, motor vehicles repairs account is involved. So, we know that this is an expense, right? Again, an expense is being debited. So, expense will increase and my profit will then decrease, because we accidentally recorded this expense in my non-current asset account, right? So, non-current asset account will be now credited, and my expense account, which will come in my income statement, will decrease my profit by 190, and that I will be writing in my last column. Last example, okay. Now in these two, I am my accounts payables are being involved, right? I accidentally recorded the transaction in Roberta's account, however the correct name was Robert. This will not affect my profit, right? No effect. Why? Because accounts payable, they become part of your SOFP, not your income statement. Of course, the individual balances will be changed, they will be corrected, but this will not be affecting my corrected profit. So again, for error number 7, I will be writing nil. Right, now we are done with all the corrections. Now what you have to do is you have to now total the increase column. So in increase column we have 110 and 130, that would be 240 in total, and in the decrease column we have 28, 18 and 190, which would be 236. So in total my profit is increasing by 240 and it is also decreasing by 236 as well, right. So if I want to reflect the net effect on this, 240 increase, 236 decrease, so there is a net increase of just $4. So 6720 was my draft profit. Now I will be adding $4 to it to calculate my corrected profit, which would be $6724. Right, if you just remember these steps, that you have to first identify those accounts which will be affecting or which will be coming in your income statement, and then how their treatment or how their correction will affect the profit. You can easily do the calculations and you can easily find out the corrected profit. Right, now we are done with part C as well. Now just a teeny tiny part related to provision for doubtful debts, let's do that as well. However, it is not related to errors, but let's do this as well. At 31st March 2020, Nadia's trade receivables owed 14,500, right. So in year end, trade receivables are 14,500. After the preparation of the draft financial statements for the year ended, Nadia discovered the following. Number 1, 300 owed by DD Supplies should have been written off as irrecoverable. So this means that this 300 which is being owed by DD Supplies, this is still part of 14,500. However, it should have been written off as irrecoverable. This means that these are what? Bad debts or irrecoverable debts. These will not be received. This is a confirmed bad debt. DD Supplies won't be paying Nadia 300. So what should be the treatment? This 300 should not remain part of 14,500 anymore, right. We have to now deduct this because we won't be receiving it, otherwise we will be overstating our trade receivables and understating an expense. Now secondly, what has she also discovered? A provision for doubtful debts of 2% of the trade receivables should have been created. So now after the subtraction of bad debts from the trade receivables, we will be applying this percentage. The requirement is to prepare the journal entries to record 1 and 2 above. Narratives are not required, right. We have the space and the marks are 4 marks for recording each of these 2 entries. So now bad debts, how do we record irrecoverable debts? Irrecoverable debts being an expense is always debited. The year is 2020, March 31. Bad debts will be debited or irrecoverable debts. So irrecoverable debts debit, an expense 300, and against the customer DD Supplies. So DD Supplies would be credited to decrease their account balance. So now what is the situation of my trade receivables, of Nadia's trade receivables? Previously they owed 14,500, right. 14,500 they owed previously. Now I have to subtract 300 so that I arrive at the amount which is likely to be received, which would be 14,200. Now on this amount 14,200 I will be applying my provision rate, which is 2%, and that would be 284, right. So out of 14,200 I am estimating that 284 might also not be received. So this will be recognized as an expense in my income statement, right. If we are given with the opening balance for provision for doubtful debts, then after calculating this amount, I would have taken the difference. I would have decided whether it is increasing in the current year or whether it is decreasing, and then I would have decided how to record this as an income or as an expense. But if no such information is given, so just directly record the amount which you have calculated as an expense in your income statement, right? So what is the double entry? Income statement will be debited with 284, right, on the same date. Income statement debit, all the expenses are debited, that is why income statement will be debited with 284, and provision for doubtful debts will be credited. Provision for doubtful debts being a contra asset account, if it is increasing, so that will be credited by 284 as well, right? So this is how you will record the irrecoverable debts and provision for doubtful debts as well. So we are done with this question, and in this question we learned a lot, right? We learned different types of correcting entries. We learned that if we are not required to make the correcting entries but directly the suspense account, if we still make the correcting entries, that would make our life a lot easier in preparing the suspense account, and also if we are required to calculate the corrected profit, right? So that's it for this video. I'll see you in the next one. Take care. Allah Hafiz.